The big story this midday: signs of distress in China's economy and rising U.S. bond yields have Wall Street investors hitting the panic button. The Dow fell more than 200 points in the first half hour of trading today. There you see the Dow down 170 points right now at midday. Financial analyst Clark Hodges joins us from Hodges Capital Management in Uptown Dallas. And Clark, we're starting to feel good about our 401ks, and then this happens. What's going on right now?
Well, there's a little bit of trepidation out there just because of Bernanke last week indicating he may not keep up the QE for much longer. And then something happens like that over the weekend and China gets involved. You've got the summertime volume, so a lot of people are out on vacation and they're selling every single day, but there's not necessarily buying every day. And also keep in mind, there is a lot of computer trading in this. When a computer has a fill for a sell and it's at a certain price and it goes down and there's more fills, there's more fills, there's more fills, and pretty soon that snowballs. So you've had 2 or 3 days of this. I wouldn't be overly concerned just because the market's been very good this year, and a 10% correction would be healthy, and I think we're about 7% right now.
Last week we talked about with you, in fact, about how the market was a little overinflated, and you said it just needs time to correct. But is it crossing the line now to a point where it could reflect real economic issues here, like perhaps inflation, higher interest rates, slower job growth?
Well, higher interest rates are coming. We all know that. But higher interest rates are good for equities. They're bad for bonds. And a lot of people tell you that businesses won't do as well in higher interest rate environments, but there will be businesses that do well. And the bond money's going to go out of bonds when interest rates go up. Where's it going to go? It's going to go into equities, I think. So I think the equities are fine. I think if I was holding long-term bonds and I was thinking about retirement, I would have a serious conversation with my financial analyst.
And on that note, what is your advice for investors in general right now?
I'd say stay the course. Don't let a day or 2 days like this affect your overall plan that you probably created with a financial advisor. Stick to it. If you're a long-term investor, go buy shares or a mutual fund today that you like, because it's dipping today. Mm-hmm. And you'll be glad you did in the long run if you're a long-term investor.
All right, long-term is the key, though.
Right.
Thank you, Clark, so much for joining us, and we'll have another check of the market coming up at 12:30.